Hello traders, welcome to the weekly market overview with me Pierre from PAFX. I hope you all had a good trading week last week, and we're gonna have another session where we're gonna take a look at the market for the next week and see what are the opportunities out there. If you are new to the channel, please do not forget to click the subscribe button and turn the notification on so you get notification when we go live or when I do any tutorial videos. And of course, please, if you like these sessions, do not forget to hit the like button. So welcome everyone, and as usual we're gonna roll the disclaimer, and please read that carefully, and it's very important that you know about the risk involved in trading. These sessions are only for educational use. It is the way I see the market and the way I'm gonna be trading it, so it's not a signal in any way at all. So next week we take a look at the news calendar, and as you see there is a lot going on. But basically, I think the most pair you're gonna be looking at for next week are the New Zealand dollar, the USD, and we do have the Super Thursday for the sterling. We're gonna see the inflation report, we're gonna have monetary policy summary, we're gonna have the official bank rate, and the expectation for the sterling is no rate, and it wasn't a while ago when the market was expecting some rate hike, but after some bad numbers for the sterling, seems that the expectation are in no rate hike the upcoming week. Then we do have CPI and core CPI for the US dollar, and the CAD may be gonna give us some moves on Friday when we get the employment change and unemployment rate. And we end the week with a speech by President Draghi. So yeah, it is a fully week with major events. And there is, of course, a lot of medium impact events. If we take a look at those, you can see there is some of them as well. Monday, UK bank holiday, so don't forget that. It's gonna be a slow London session until New York's open. So let's take a look at the chart, and we start with the Dixie as usual to see what the dollar been doing. As you see, we've had a nice three bullish week momentum, been strong after we broke outside of this range. You know that we've been talking about this long-term range for a while, and that, as said, if we break this level here, the monthly pivot point, that we could look for the retest and the continuation, and that what happened so far. And now the Dixie reached an important level of resistance. Let's go back to the weekly and take a look at that. And the reason it is an important level, as you see in the past here, been acting as good support, an important flip zone at this level. Here we have a test, another one here, another one here, here as well. So it is really an important level, and one could expect at least a possible correction. But if you forget about the level, you see that two very strong momentum weeks. We've not seen that in a while, especially after so long of consolidation. Usually you get a strong move to the upside. So keep an eye on this level. There could be some trouble at this area. We do have the monthly R1, and once again, looking left, it is a very good flip zone here for the Dixie, as you see, been tested many times as support and resistance level. Now One thing to mention is it is the first time we break and close above the 200 daily moving average. As you see, the last time we tested that level was we tested not the level we traded around the 200 moving average was back in May 2017 here, as you see, when we broke below it again and continues down. So this is also a good signal for the dollar bulls. We broke outside of this descending channel as well, and when we reached this important resistance, we got some sideways. Thursday was a bearish engulfing, and Friday we've got some movement at the NFP after the NFP numbers came out. Now the NFP numbers, if we go back and take a look at that, was mixed numbers. So as you see, we've had very good that the unemployment rate was lower, 3.9. The non-farm employment change was 164k, expectation was 190, but I think one important aspect was that the average hourly earning was a little bit down, as you see, lower than expectation. This is an important number, and if this was to be a green number, I think we would see the Dixie rally even stronger. Now the market did what it always do during the NFP. You get some spike up and spike down, and then back inside the NFP levels during that particular time. As you see, we've got a spike down, spike up, and back to the middle once again. Nothing special. Still inside this important range, up here on the short time frame, I think this gonna be the important range we're gonna be looking at for next week. Anything below here could send the dollar in some deeper correction down, probably toward the monthly pivot point. But investors seems to pushing the dollar without without any fear, and if they gonna continue, you want to see a break and close above this important monthly R1 pivot here for a continuation. For me, some correction down is very welcome to give us a better level to buy the dollar. I think since we broke out of this area down here, is now signaling a midterm, at least a midterm bullish move for the dollar. But once again, guys, you see we have some possible double top here on the 4-hour, and a bearish divergence going on since this high. So the RSI is making lower highs while the price was putting higher highs here. So this is signaling for a possible reversal. Is it a complete reversal or not? But I think there is a possibility that we may see a break below, retest, and a deeper correction before we continue the up move. So keep an eye on that for next week, and do not forget we do have some important news for the US dollar starting Tuesday. ISM manufacturing PMI. Then we do have the sorry, let's go forward to the right week. PPI month on months. We have the speech of Chair Powell on Tuesday, and CPI, very, very important inflation numbers on Thursday as well. So that gonna probably be some catalyst for the move for the dollar. Yeah. Gold still inside this major range, as you see. The 1300 still a very important support level, and every time we reach this level now, we got some nice bounce. Once again, we have double days here. I'm not sure why, but this gonna be only one candle. This is the Friday candle. This is nothing. Actually, TradingView does that every time. I'm not sure why. So for gold, the major range is very clear. You have the 1300 as support. You have the extreme high of the range, the 1360, as resistant. And in the middle here, when the price reached the 1328 area here, we have the mid-range and the level where we see some trouble every time we reach that level. Yeah, so keep an eye on the 1300 down here, where we do have a little bit higher. The 200 daily moving average, as you see, been respected as well. So this level still not broken. And if that happen, it need to happen for some catalyst, and that would be probably a continuation on the Dixie higher to give you this push below. As far nothing of that happens, if the Dixie will do that correction lower, I think gold have some more room back up inside this range up here. So keep an eye on the 1300, and up here around the monthly pivot point area 1328 to 1330 gonna be an important short-term resistant level, as you see. Oil, nothing has changed, guys. Keep saying we are still bullish and we should be looking to buy the dips. Since we broke above the 200 weekly moving average, there was continuation on oil. Last Friday we did break an important resistance here. As you see, we broke above this structure, and seemed that we had a nice close as well. The price does not push back inside the range, so we've been trading this nice range here. We've got very nice movement inside the range, trading, buying the lows, selling the highs. But now, as you see, the range got broken, and seems that there was very little profit taking, since we never got that push down since it was weak. And usually we see some profit taking after such a major move, and we got some push down again, but that didn't happen. And as for now, this range is broken, and we still have possibility to move even higher. Now, where is the place to buy this thing depends on what happen next week. If we see like that we're gonna keep holding above this area, making some consolidation, we should be buying the low of the consolidation in anticipation to break higher on oil. Or if you see that we break back inside the range, then there is a possibility that we move all the way back to the low of the range, and then you could try to buy this low instead. So look for flags, some correction lower, or if we consolidate above this range, expect a breakout to the upside, and continuation is my idea. For the Forex, we start with Aussie New Zealand. As you see, we've been moving up since the touch of this level down here. 3 bullish weeks now, reaching the 200 weekly moving average last week. And it seems that there is some more room to reach toward this possible resistant level near these lows and near these highs as well. So I think there is some more room to move higher on this one. And on the daily, we're gonna see it a little bit more clear. We've got this consolidation, and Friday was a break and close above this range, and I think that some more up is still possible here to reach this important support and resistance level. If we look left, you see it clearly. It is a good level, and we're still below the 200 moving average, so we may test that as well for next week. On the 4-hour, we've been trading this nice channel here that now got broken, as you see, and closed above. So if you are holding along, there is still some room to the upside. First trouble here, and then this level is where we do have a better resistance. As you see, since we broke above the 200 moving average on the 4-hour here, after this some kind of flag or consolidation above the 200, we've been making impulsive correction and then another impulsive for Aussie USD, Aussie New Zealand. Aussie USD found support as well. We've been talking about the 0.75 level. I did mention this level in my weekly overview last week, and we've been following this move to the downside in my trading room as well, and I think some of traders did take the long on this area down here, since it is an important support level, been showing that in the past, and it is a good psychological number as well. Now, what happened is we actually broke below this important trend line here. As you see, been tested 3 times, and now this trend line is basically broken. And what we could expect after the Aussie USD being oversold, moving very fast to the downside, is this possible bounce to probably retest these lows before a move back down again, especially if we get that correction on the Dixie from that higher level. If we go down to the 4-hour to be more sure on this, to move to the upside, you want to see a break above this level, and that it's gonna hold, and then probably a continuation. Otherwise, any test toward the 0.75 could be another opportunity to try to buy the bounce and see if we're gonna break higher. Yeah, as far as this is holding, we could keep buying this level in anticipation for some correction higher short term. Now remember, this is a counter trend trade, so but based on last week, inverted hammer bullish engulfing after that, and Friday we had NFP, and we see that we've got rejected one more time from these lows down here. So all this showing that this support level is an important one, and we should keep an eye on that. Chief Jappy, I hope many of you took this trade, because I did mention that trade. I've been mentioning the trade since we broke this trend line actually, but in last week weekly overview, I did mention that we've trading at an important support, and that a break could possibly close the gap and even possibly reach the 107.60 down here. I still see that is possible to happen, since looking at the weekly, there is no support at all before we reach this area. Now if we go down to the daily, you see as well a bit clearer picture here. We broke the support, broke the monthly S1, the gap is closed, but there is no support here, structure wise at least, before we reach down here the 107.60. There could be some monthly pivot point at this area, of course, that may give this some trouble, but structure wise there is not much left, as you see. So now we are trading down here at the monthly S2, and if we add the S3, you see that the S3, which usually not reached, is down here at this near that support level. So yeah, sell the rallies, still the idea here, especially if we get something like this toward this level, to try to sell the retest of that structure. Not sure if we're gonna get such a deep correction, since it looks very heavy for now. Euro Aussie back at important support. One could expect possible bounce from here now. The last line of defense, if this structure is broken, is down here, the low of this wick down here. As you see, the RSI is making some kind of hidden divergence, hidden bullish divergence, since the low on the RSI is much lower than what we have on the price. So there is some hidden bullish divergence. The price is at good support structure, as you see. So keep an eye where Euro Aussie is testing now, to see if you're gonna get another bounce higher here, or if we're gonna break. If that happens, then we may reach and test these lows. Longer term, you see that we're still in a bullish trend. We're still above the 100, the 200, and the 100 is coming here as well, following this trend line. I think we just broke the 50 if we add that last Friday. So it is getting closer and closer to retest these areas, the trend lines and the moving averages. EuroCAD also bearish during the last week. If we go to the weekly time frame, you see that on the weekly time frame we broke an important swing low here, and I think there is not much left of support before we reach this level down here. So this for me is the better support level, and if we reach that area next week, one could expect a possible bounce on the trend line and this support cross. If we go down to the daily, you see that the 200 moving average is coming here from below, following the trend line. This cross area is an important support level. If we break below the monthly S1, where the pair did stop last week and bounce a little bit higher. So keep an eye on this crossroad here, where we do have support, trend line, moving average, all of them at this important level. Monthly S2 a little bit lower, could give you a possible bounce here, probably to retest these swing lows at this level up here. 4 hour time frame, you see that we're getting impulse corrections, another impulse. Last week we had this little range here that is still inside that range, and that the monthly S1 where the level did stop and give you a little bit bounce. So this could be some profit taking, and that we probably could keep moving to reach these lows as shown on the daily and the weekly. Euro sterling still looking healthy for a little bit more up until we reach the 200 moving average and this neckline. It is still possible to move a little bit higher. We now have a confirmed head and shoulders formation that broke the neckline, as you saw happening last week. So this inverted head and shoulder is confirmed after the break of this neckline, and yeah, I think there is still some room to the upside, and 4 hour we are getting some kind of ascending wedge. Usually we used to have some bearish divergence when these wedges start to happening, and this is what we actually have right now. So on the RSI we already start having some divergence, but structure wise I think to really be sure, if you want to go against this move, is this level up here could be a good structure to work with. Otherwise the top of the channel. But as you see, this structure here, the 200 moving average, monthly R1, there is some trouble on the way before we reach the top of the channel, which I'm not sure we're gonna really reach without trouble on the way. Euro-JAPY, great trade last week, kept moving down and gave some good pips. We go to the weekly time frame to take a look at the important zones here. As you see, the 200 weekly moving average been acting as good support lately here, resistant here, broken and got retested many weeks, couldn't break below that. So this is an important level at the 12950-ish area. And if we go down to the daily, you see that since we broke below this structure here, there is nothing to hold it until we reached our target, which was the 130 level was the target for us, and we took profit here. I still think there is possibility that we reach the extreme low of this support here, but what happened last week that we never closed below Thursday, as you see here. But once again, Fridays could be some profit taking after trading such a move all the way down, so there could be some profit taking here. As you see, since we broke this box, the signal was sent to sell the retest, and since then we've keep moving down and reached the support level at the 130. So as for now, one could expect at least some short-term correction higher maybe before another move lower. I still think 128.30 could be a good market objective to test that level, as you see here. So you want to see the 130 got broken and closed below, and if that happened, then you could expect to reach these lows down here. Euro New Zealand, we go to the weekly, you see that we are still consolidation inside this range up here. On the daily we reached it, broke above, but then bearish engulfing day here, very clear rejection, some sideways and then continuation. Structure wise, there is not much here. Looking at the daily time frame, it is still a bullish structure. Trading above the 200 moving average was a perfect cross here between the 200 and this support level where we got the bounce. On the 4 hour, as you see, this short-term structure is now an important structure to keep an eye at, because if Euro New Zealand to keep moving lower, we want to see broken, retested, then more down is possible on the pair. So keep an eye on this structure, possible bounce level, daily time frame. You see that last week we moved nicely to the downside. Friday was some indecision, correction higher, but then pushed lower once again. Okay, Still no structure looking left. EURUSD weekly time frame broke below this consolidation, been squeezing for a very long time. After such a long time, this is the weekly time frame. When we get a breakout, usually you get a strong momentum. Now, why we did move lower here, you could see it on this idea that I did publish for a while. It was the 25th of January when I published this idea on the monthly, why we could expect some correction lower. And as you see, the price was on the monthly chart here when I did publish the idea, when we was on the way up, mentioning that we reach a good resistant level where we do have a cluster of Fibonacci, the 38.2 and the 61.8 of this whole move and this second leg here. And since then we've been moving lower to the downside, but the best breakout was the last couple of weeks. So weekly time frame, the move toward the test of this low was clear after the break below the range, and as you see, the market did reach almost to the pip to this swing low before we got a little bit bounce higher once again above the monthly S1 last week, and you see it better on the daily where the price did test and got rejected. So as for now, we are trading below the 200 daily moving average. The last time we touched that moving average was down here after the break on the French election, April 2017. And now for the first time since then, we trading back below that level. So after this strong move, one could expect some profit taking at last Friday, and probably some more bounce higher is possible now when we do have this bullish divergence on the RSI on the 4-hour time frame as well. NFP move was up, down all the way, and then rejection back inside the NFP, back above the monthly S1. So after such a rejection and bullish divergence on the RSI, one could expect probably some type of correction higher before another move to the downside, in my opinion, especially if we get that correction lower on the Dixie at that top. So on the daily time frame, we probably want to keep an eye firstly at this level up here, the 1.2090, before we get another bounce lower as a first level to try to look for a sell. Yeah, you see we are now below inside this lower range. We left the upper range and now we are inside the lower range. Sterling Aussie, as many sterling pairs been trading to the downside the whole last week, and the pound has suffered quite a bit of weak economic data, as we said, and everyone was expecting maybe an earlier rate hike, but I think after some bad PMI numbers, inflation does not seem to keep moving as expected, and stuff like that made the investors think that we do not have some more rate hike, and maybe until later during this year. So this could be some of the reasons that started the move to the downside. But if we look at the technical without any fundamental thinking, you see that we came all the way here, reached these Brexit week, moved to the downside, closed the gap. At that level we had the 200 weekly moving average acting as a very good dynamic resistance for like 1, 2, 3, 4, 5, 6 week, trying to break above it, couldn't happen, and then the break below this consolidation happened last week. And after such a consolidation, usually you have lots of stop losses below here for the longs, and that trigger and help the price to move in such a strong momentum. So as for now, we were looking to see if we're gonna see some bounce at this previous resistance that may act as support. That didn't happen. The week and the day closed at the low, signaling continuous strengths to the downside, and I still think we're gonna be looking to sell, and that this best support could be down here before a possible bounce higher. So still sell the rallies. If next week you got another move toward the retest of the bottom of this range, that could be another level to try to sell it. Do not forget, Thursday is very important day for the sterling, and we may see some movement. So this signal is still here, was published in the room, that after we broke below this structure, we did look for the retest that happened here, and we sell that, reach a target which was this structure and the monthly S1. Perfectly pain-free trade. It was very easy. You see that the range here clearly got broken. All we had to do, look for the retest, look for your signal and sell it. So we gonna keep having the same scenario. As you see on the 4-hour time frame, this is a no man lands now where the price is, and no real support before we reach these levels down here. But any correction higher is welcome. That would give us a better sell price. Sterling Chief also to reach an important level down here, where we do expect some trouble, since it was previous resistance that it may act as support. As you see, we broke the neckline and keep moving lower. Same here, possible short-term bounce up from this area is possible, and if that happened, then we want to try to sell the monthly pivot point and the retest of this neckline back down. Another sterling pair. Let's go to the weekly on sterling CAD. You see that last week we broke below the monthly S1, broke below this possible resistance to act as support, and on the daily we see where we could expect some trouble, and that could be at this swing down here. This swing low could give it some trouble, because as you see, if this to get broken, there is nothing left structure wise before we reach these levels down here. But we do have the 200 moving average that usually used to be a good dynamic support. Keep an eye on this structure down here for next week, as first that may give you a possible bounce. Here on the 4-hour you see it much better, that if the price reached this level, if you are holding a short, you probably want to take some profit or keep an eye on your trade, because there is a possibility that we get some kind of bounce higher. The trend is strong to the downside. Yet another sterling pair that closed at the lows without almost any profit taking at all. And the last one for the sterlings is sterling USD, another pair that reached the 200 weekly moving average. The signal on the weekly was this bearish engulfing candle, and since then we've been moving lower 3 weeks in a row, broke outside of this ascending channel, and I think the next support level here may be on this structure down here just below the monthly S2. Now the sterling USD was the only pair that did move a little bit higher and didn't close at the lows, as you see here. So on the daily we did reach the daily 200 moving average. This is like the first one that reached the daily. On the rest I showed you, and we've got a little bit bounce higher, but still it is a bearish day, close below the previous day. There is still some room down toward this structure. I think this could be the first trouble level, and then you're gonna still seeing some other levels on the way. We have this swing low as well, could act as possible trouble area, but very strong move, seems very extended, could need some correction higher to try to sell it from a higher level. So any move toward the monthly S1 is very welcome. I think this structure could be a good level to sell it once again from that area. New Zealand USD didn't really reach the support level. I wanted to see a touch of this level before we get this bullish engulfing on Thursday. I still see this level as a possible level to be tested before the bounce, but as you see guys, been moving down in a very strong manner. This is the weekly, 3 bearish weeks in the row. Last week close, break and close below the previous week as well. It seems that there is a little bit of room for this before some correction higher. So actually for me to really start buying this, I want to see a break, retest, and probably expect some retest of the monthly pivot point or these structures up here. The better level would be if we really touch this structure here, the retest and this neckline, and then give me a signal to try to go long. In my opinion, this would be the better structure to work with. USD CAD, couple of weeks of sideways up here. You see that we playing with this 200 weekly moving average. On the daily, we see how important this level has been to the upside, rejected many times now. It's been ranging up here since the 24th of April, and consolidating, and I think the breakout outside of this range gonna give us a very strong momentum move when it happens. As for now, seems that the highs here are rejected. As you see, the lows are defended as well, and one should keep buying the lows, selling the highs, probably hold a long from here and a short from here, and wait for one side to break out. That is the scenario. As far as we are inside this range, nothing else will happen. But when a breakout happen outside of this range, I think the move gonna have a very strong momentum. Now, despite the very strong USD dollar, you see that this keep going sideways, and that for because of the strengths on oil been helping the USD CAD to stand against the US dollar. So if the DXY to correct a little bit lower and oil keep going higher, one should expect this breakout to be to the downside this time. Okay, so keep an eye on those two. The 200 moving average on the 4-hour start being more to the downside. It was flat and now more and more to the downside, and it is a clear range, and all we need to do, as I said, buy the low, sell the high, and wait for that breakout. The moving the RSI as well being going sideways in the middle. USD JAPY still in a bullish move on the daily time frame. This level, I did mention this level in the room, that the 109, if broken and closed below with a daily candle, that we could see some move lower toward the monthly pivot point or toward the 107.90 level. Now last week or last Friday we've got a break below, but the daily went all the way back above the 109 and closed above. So this structure still not broken. This swing low here still not broken on the daily, and seems that the bulls are still fighting this area. We've got the NFP release, and the first thing we saw, a move to the downside, but then the bulls did defend this area, took the price all the way back up above the 109 and then held above that level. So keep an eye on this level up here. I think the 109, it's an important level. Should keep buying that level until you see a break. If the break below the 109 happen and the retest fail to go back up, then there is a possibility that we move lower for a deeper correction. Bitcoins, for those of you who trade Bitcoins, you see that we are squeezing and keep holding below the daily 200 moving average, and we have bearish divergence on the RSI on the daily. So very important range we have now. Still the same levels that we talked about last week. As you see, this level up here, 9,800 area resistant, and down here the 8,700 structure is support. Nothing will happen until we got a clear break, either a break like this and then toward 12,000, or a break below that for a longer term to move to 7,800 as the first support. Short term, you could play inside this range, and that would be this and this. Sell the high, buy the low of this range is what to play short term. But longer term, we want to see this range get broken for a longer term move. Dow is squeezing as well. As you see, very nice squeeze now, and when this happens, when the price starts squeezing like this, sooner or later we're gonna get a break outside of this move here. So it getting narrower and narrower until the end. After this and this, the price gonna move, give you a strong breakout to the upside or to the downside. As you see, every time we reach the 200 moving average on the daily, it keep being defended. Yeah, so if we go back here, when we broke retest the 200 was back in June 2016. During the Trump election, we had another spike toward the 200 moving average, and since then we never broke and closed below that daily moving average on the daily time frame. So you should keep an eye on that moving average, and this squeezing trend line to the downside. I think we need to see a clear break above the trend line or a clear daily break below the 200 moving average. If that happened, I think there will be a lot of selling pressure. So keep an eye on these levels. On the 4-hour time frame, you see it more clearly how we are squeezing and testing. Every time we test this trend line, we've been moving lower, yeah. So very interesting for next week. The 24,600 is as well an important support level if we hold above and keep moving higher inside this range. Otherwise, these are the levels to the downside. Let's get rid of this one. You see that this is our important support short term now inside here. But once again, guys, it is squeezing and squeezing, and we're gonna get a strong breakout outside of this triangle. And that was it for today, guys. Let's see if you have any questions or any other charts. Hello, Jan Huzaifa. Nice to see you, man. I'm not seeing you active in the trading room, so I hope you are back now. Someone is asking for Sterling Jappy. Seb. Let's take a look at that. As you see, Seb, we are now sitting at this important support here. 147 is the level you want to keep an eye at for next week. You see how many times this has been acting as good support and resistance level. This is the weekly chart. After 3 weeks down now, we reached this important support level. So if we go down on the daily, you see as well that why I do have this level as possible support, since been tested many times as both resistant and support in the past. So very clear that the bears are in control in this market right now. It is a possible support level, and for more down, 147 need to be broken. But I think, as you saw here, we've been playing around the 200 moving average, been acting as good dynamic support and resistance. And for me, any retest toward this structure, the 149 would be the first level to look at, to probably try to short down toward the support level here once again, yeah. That would be the first level. As I said, you have another good structure a little bit higher, but I'm not sure, based on how heavy the sterling is looking, I'm not sure we're gonna reach these levels up here, yeah. So this for me still looks like sell the rallies. The up move been very slow here, but the bearish move was a clear strong move to the downside that is sitting on support right now. You're welcome, Christina. See you in the room later during our session. Brian, you said there is both regular and hidden divergence on gold. What time frame, Brian? I'm not really sure between what and what. Yeah, I think I can see it, Brian. When you look at the daily, there is no divergence. 4 hour, there was divergence. It is a clear divergence, but been going on since this move here between this low, and this is a normal divergence or a regular divergence. Yeah, I think you mean this divergence, this regular divergence. Yeah. Now, the hidden divergence could be this one here, I think, between these two highs. It was coming from this high toward this high. Yeah, so that's right. Mr. Mohammed is asking for USD Chief. Let's take a look at that. Wonderful move to the upside. Been a great performer. One direction only. It is like very, very extended. We reached the monthly R1 where we did expect some trouble. Now, the price did not reach that levels yet, but one could start looking for a possible troubles during the move to the upside. For me, I would love to see it reach this level, the this area here, before start looking for a possible reversal to the downside. But anywhere around this area now, monthly R1 is important. We do have this previous structure as a possible resistance, so seems like soon we could start look for some correction lowers once again. Based on where the Dixie is right now, this could happen. 4 hour time frame, you see that we had some slowdown during Thursday and Friday, and we do have as well some bearish divergence on the RSI like this. So there could be some correction lower. First trouble area should be down here on the 4 hour time frame if you get your reversal signal. Otherwise, on the daily, for a deeper correction, could be down here and then another bounce higher. Yeah, because as you see, we do not have any structure to work with during this leg up, but we do have now the price inside this upper range now. So that's why I would like to see it trading toward the upper edge of the range before that move lower. Okay, Brian, I think about your question, which divergence to look at. If you look at the daily time frame without thinking a lot about the divergence, if we look at the support level here, this is the first thing you want to look at is the structure and not the divergence. So to make life easier, always try to look at the major structure of the market and work with that. Since the divergence is happening at a major support level, I would say I would go with this divergence that's showing to the upside, because not because the divergence only, because of that it is a support, important, major structure. We do have the 50% Fibonacci retracement from this leg all the way up here. We do have the daily 200 moving average at this level as well, because that may happen many times, that you do have some different signals. Yeah, so work with structure as first. That is the best way to go. Yeah, Jonathan, you may be late, but it's possible to see the recording. Brian, I hope that answered your question. Yes, Jonathan, we did do EURUSD, of course, as usual. So you're gonna find that in the recording, buddy. Okay, guys, I think that was it for today. Thanks a lot for being here. Please do not forget to hit the like button, share the video for those who you know that gonna be helpful for them. See you out there, Telegram, Facebook, and all over social medias. All the links you need are in the